Hi everyone, my name is Bernie Martin and I'm one of the top shelf model analysts, and today we'll be discussing what net operating income is. I will be using the storage acquisition template in order to demonstrate this calculation. So let's get started. So net operating income is a measure of profitability and is the amount of income generated from a real estate investment after vacancy, credit losses, and operating expenses. Since NOI can vary greatly depending on what the month is, we usually look at NOI based on a span of a year. So as you can see on our investor summary tab, we have this nice annual cash flow summary chart, and you can see the NOI calculation here, and it's made up of effective gross income, and that's also known as gross operating income, and operating expenses. So let's look into these factors. So what makes up effective gross income? So effective gross income is the amount of revenue directly generated by operating the property. This does not include line items such as selling the property or selling equipment used by the property. It includes mostly rent income and then subtracting out any vacancy and credit losses and adding any other income. So we'll get into a little bit more about those details, what make this up in our monthly cash flows, but that's kind of an overview of what effective gross income is. Operating expenses are costs that are directly related to operating the property. These expenses are always paid by the landlord and are not paid by the tenants. These don't include debt service, income tax, depreciation, commissions, capital expenditures, and TIs. Again, I'll go into more details about what are some common operating expenses we see in a little bit. So the calculation for NOI, or net operating income, is taking the effective gross income and subtracting out any of the operating expenses. So as you see, this is adding together because operating expenses are shown as negatives. So let's go over to our monthly cash flows and look at specific line items that make up effective gross income and operating expenses. So first we have effective gross income here, our monthly cash flows. We have operating expenses, total operating expenses, and then our NOI, which again sums these two, operating expenses being a negative here. So some of the items that make up effective gross income is our scheduled base rent revenue. So these are how much we're charging individuals for these storage units. So we're getting a total of $5.2 million here. Then we have some upgraded premium rent. So we are renovating some of the units so they charge more rent. Then we have other income, so that could be parking, and then we have RUBS income. Then, so those are all shown as positive numbers, but then we have to subtract out vacancies and credit losses. So we have loss to lease, we have general vacancy, we have concessions, so maybe some free units for a month, some bad debt, and some non-revenue units. So that is how we model out effective gross income in our storage model, and those are some of the most commonly seen effective gross income items. So now let's move on to operating expenses, also known as OpEx. So these are a reminder that these are expenses paid by the landlord and not by the tenants. So some of them that we commonly see are repairs and maintenance, administrative, unit preparation, security contract, monthly services, utilities, advertising promotion, payroll, salaries, other expenses, real estate taxes, franchise taxes, insurance, and management fees. So that is how we calculate NOI. So NOI is a very powerful calculation. We also use NOI to calculate the value of an asset. So as you can see in our exit, we take essentially the forward 12-month NOI and exit, and then we divide it by a certain cap rate that you can select, and then we can get to our gross sale proceeds amount. So that's all I have today for you on NOI. If you have any questions, feel free to reach out. Thanks.